Hello, everybody. Welcome to the Trading with Ashley show. I'm so excited to share something with you. I know a way that you can replace your income, basically create your own salary, and I'm going to show you exactly how to do it. Now, the best part about this is it all has to do with trading options. So you don't need to drive to work to a place you really don't want to be away from your family. If you are interested in retirement and you want to find a way that you can create income for yourself, this is the perfect video for you. In fact, I'm going to show you how I do it live so that you can see everything real time. Now, for starters, you need to purchase a stock that you're really comfortable owning, and you need to get that stock at a fair price. That's what's most important if you are going to try to create a salary for yourself on a stock you love. Now, the one that I am going to be showing you today is Palantir, and I had a very strong belief in Palantir, and I started acquiring these shares long ago. But I think my timing is perfect because we have a lot of stocks in the market right now that are starting to pull back to really strong levels of support. So this would be the time for you to start acquiring your favorite stock with sound fundamentals that has a bright future. This will allow you to start selling covered calls on these stocks as soon as they start profiting. Now, on my channel, I teach a lot of different ways to trade. If you're going to run the wheel strategy, then that strategy starts with selling cash secured puts. But when stocks are at a strong level of support, you can bypass all of that and just go buy 100 shares of your favorite stock to get this process started. And if you've never done this before, then try to select a stock that's lower priced so it will allow you to see the ebb and flow of the price movement, and then you can get a much better feel for it before you put significant money at risk. Now, the best part about what I'm about to teach you is as long as you are selling covered calls above your cost basis, above the price that you purchased the stock at, you cannot lose. Yes, you can leave money on the table if we blow through the strike price because the stock is just in a bullish mode. But I want to teach you how to select the right strike price so you minimize that potential risk of leaving money on the table. And another reason I love this so much is this entire year we have been in a down market at this point, but I have found a way to still generate income for myself, and this helps me pay the light bill, the grocery bill, and some other things that we may need to live, all while the market's going down. And of all the strategies I teach, this is actually my favorite because this is the way that I broke into option trading. I actually spent the vast majority of my life working for corporate America, almost 30 years of walking away from my children and saying, I promise I'll be able to try to make it to your event. I got tired of that. And now I do this for a living and I absolutely love it. I can adjust my trading style to whatever's going on in my life. If I'm super busy, I may pivot from selling weekly puts to selling monthly puts. But it all started with this strategy called covered calls. I cannot wait to show you all of my secrets so that you too can start creating a salary for yourself. Your very first step in this process is making sure you're getting the stock at a fair price. So in my example, I bought Palantir over a year ago and it was much lower. But now that it has had a more proven business model, it has of course risen. However, it has recently experienced a pullback. So let me show you some different potential buying levels if you want to trade this particular stock. Now you can apply this methodology to any stock that you're interested in. But before you actually decide on the stock, I want to show you something you should check. Now you can find this on various sites. I am looking on the analysis tab on Yahoo Finance, and this portion is actually free. And what you want to do, you want to look at the health of a company. So right here, this is showing me that Palantir is a healthy company. The blue bars right here, they represent the revenue that Palantir is bringing in. And then these yellow bars, they represent the amount of money that they're keeping, what they're earning from this blue revenue. You always want to see that this relationship is a healthy relationship. Let me show you an example of what would be a riskier play on a stock that doesn't have this dynamic going for it. Ticker symbol SOUN is a popular stock to trade because the premiums are really good. But I am very limited on how much I'll put in that play, and here's why. Look at the relationship of the blue to the yellow. So this company is a newer company. It's a riskier company, and that's why it's trading so low, but they're not yet profitable. And you can see that here. You have revenue coming in, even increasing revenue, but they haven't quite figured out a way to turn that revenue into actual profit. So this company is a little bit upside down. You could take a little bit of risk on this, but I would not plan to establish a large position in a company until you see the healthy relationship of both revenue and earnings continuing to go up. All right, now we are back to Palantir and we are looking at technical analysis. And right now I am looking at the Bollinger Band. It's one of my favorite technical analysis tools because it shows me the potential high and low for the stock. So because we are in the bottom part of the band right here, actually the bottom of the band is closer to about 72, and we're about halfway down to the bottom, which this shows me it might be a good time to start to establish a position, but just know that it could very likely come down to the bottom of the band, and then you would want to flesh out your position. And so when you're looking at this and you see that the RSI is under 50, then a stock does have a tendency to want to pull down. Once this is over 50, then you're usually pretty safe knowing you're at the local bottom for at least now, and it will start to ride up the chain. But right here, we have an important moving average that I'm looking at. This is the 100-day moving average. It could very well pull back to this before we see another bounce. Now, if we get a deeper correction in the market and we see the SPY go below its 200-day moving averages, stocks like Palantir will fall as well. And the line in the sand that I have for most stocks that are profitable is this 200-day moving average. You can see here, this sits at around $50. So if we have a more dramatic correction in the market and Palantir pulls down to its 200-day moving average, this is where I would flesh out my complete position that I want to use to create a weekly salary for myself. Once you have decided that you want to move ahead and purchase shares, here's how you fill out the ticket. It's just simply buying 100 shares of a stock. Now, I showed you various potential price levels, so you can Now, I know I showed you various potential price levels, so you can do a couple of things. Let's say your goal is to have 500 shares. Now, today it's trading at a reasonable price, so I might decide to go ahead and do a market order to purchase my first 100 shares. But I may want to put additional orders in so that if it drops down even lower, I could start to average down my position. So in that case, I would maybe set a limit order. I'd go lower, let's say $80 a share, and I would make this good till canceled. That way the order will stay out there, and if it dips down to that price, then it will go ahead and fill the order. Another thing you can do that is a great way to trade once a stock is already down low is do a trailing stop order. So let's say in this example, I'm comfortable either buying Palantir at this price or I want to see it continue to go lower. I would put a trailing stop order on it, and I would put on here what percentage I'm interested in. So let me show you how this works. I just put a 3% trailing stop on it. So what will happen is if Palantir continues to go down, this trailing stop will go down with it, and it will only kick in and actually buy the shares if it reverses and goes up by 3%. So in this example, you can see I put a trailing stop on it right now. It's trading at 87.46. Well, if it then goes up 3%, it will go ahead and place a buy order for me higher than we are now, 3% higher at $90.09. So you won't be getting the rock bottom prices if you do this, but it will allow the trail to go down with the stock, and only when it reverses will it actually execute the order. Now, in this situation, what I would do is I would wait to put this trailing stop on until this 3% right here is at least lower than where I made my first initial purchase. Now that we have our shares, I am going to show you how to select a covered call and start generating this income weekly. The best possible time to get the most premium and ensure you're getting a call away at the best price is if you wait until the stock is up in this upper quadrant right here. And then you would want to sell at the top or above the band. And your RSI, you would want it at 70. However, if you're doing this for income, like I am, you want to take a little bit of cash and build it along the way as you're heading up the band. And so right now we are under 50 on the RSI, and I want to go ahead and make a trade. I'm looking right here at the middle of the band, and it is 102. So that's a little high. I want to make a trade that will be good for the end of this week. And the end of this week is just a few days away, but I wanted to wait for a green day to execute this trade. So let's go look at the specific trade, knowing we're right here at about 85, knowing that there's resistance right here at about that $102 level. But more than likely, if we're going to get there, it won't be in a couple of days. This will probably be next week. So keeping that in mind, I'm going to look for a trade where I can make a little bit of money still this week. If we go and take a look at my holdings, you can see right here in this one account, I have a couple of thousand shares, and obviously I bought them a lot lower because I'm already enjoying over $100,000 in gains. But this is just showing you the gains that I made on the stock appreciation. I have covered calls on this stock for over a year now, so I've made even more with this income. I am going to see what I can get for selling covered calls that may or may not be breached, but if it's breached, I will be able to roll it, keeping in mind that more than likely, if we continue to go up next week, my resistance will be around that $102 level. I'm looking right here at the $90 strike, and this does expire in 2 days at this point. So we are looking at the expiration date of March the 7th, and it's currently March the 5th, so just a few days away. And I like this covered call. This is the $90 strike. It means I would give up my shares at the $90 mark. And for offering to do that, I will receive $1.06 for each share that I have. Well, I have 2,000 shares, so that should be a nice little extra bit of money that I will be receiving. And if my shares are called away, it's not the end of the world because I'm already in profit. Now, I would want to get my shares back. I could do cash secured puts to do that, but let me show you this end of the trade right now for selling covered calls. When you fill out the ticket, you want to select sell to open. I have the shares to back it up, so I'm selling the covered call. I have 2,000, so I'm going to do 20. I've selected the expiration date of March the 7th, the $90 strike, and then this is a call. Right now it's paying 106. One thing I like about the Merrill platform is it shows me the days range. So I'm not getting the most that it offered today. This was more than likely this morning on a pop-up, but I'm also not getting the least amount that they offered, which was 75 cents. So this is kind of a nice little spot in the middle. And so when I do the order, I usually will put a limit order here, and I'll put in the pricing that I'm comfortable with. This shows the current bid is 98 cents. The ask is $1. So this is a pretty tight bid-ask spread. So if you're comfortable with that and you're willing to accept what they're offering, keeping in mind that it's ranged from 75 cents all the way up to $1.82 today, then you would go ahead and market order in. Now, if you don't want to do that, if you're earlier in the week and you think there could be some fluctuation, you could do a limit order, and you could put your limit in right here, and then you can make it good for the day or good for the whole week. You could do good till canceled. But for the sake of what I want to show you, I'm going to go ahead and select a market order. Right now, this is offering $1,960 to agree to give up my Palantir shares that are already in profit at that $90 strike. And for just a few days left on price dynamic, I think that's a very fair amount that I will be receiving. Okay, I just executed the trade, and now I have almost a couple of thousand more dollars to go into the weekend with. And like I said, if my shares are called away, that's another $5 that I would be receiving on the price appreciation. So that would give me another $10,000 that I would be able to enjoy if my shares are called away. Now, I have another account in this particular broker, and it has 3,000 shares in it. In addition to what you just saw, gaining almost $2,000 today, I also was able to gain another $3,930 for agreeing to give up my other shares at the $95 strike price next week. Now, it's the next day, and I thought it would be helpful for us to take a quick look at how our trades are doing. And you can see right here, the 20 contracts that I sold, they have now gone down to 83 cents a share, which that shows that I am actually winning this trade at this point. Now, I'm not going to, but if I were to close this trade out early, I would actually keep $296 of the premium that I received. Now, let's look at the other trade. Here is the trade that was the $95 contract. Now, this is not expiring until next week. It shows that it's losing a little. All that has happened is since I've opened the trade, Palantir has gone up just a little, and that's what's showing this loss. But as time passes, if Palantir stays where it is, or goes down a little, or even just goes up a little as we get closer to this expiration date, then you will see this gain loss start to improve. I hope you found this helpful and that my teaching style is one that will help you learn. I teach thousands of students every week how to do this for a living. I would love for you to join me. If you're interested in knowing more and spending more time with me, don't hesitate to click the link below, pick a brief call, and then you too could be trading with me as early as next week. Remember, if you're with me, trading with Ashley, there is no trader left behind. Now, if you are interested in seeing the other side of the equation, selling cash secured puts, perfect. You can watch that video right here.